Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday. It's March 7th. Pretty quiet day today. No economic news releases scheduled for today. It'll kind of start heating up a little bit tomorrow when we get the ADP numbers, and then the weekly jobless claims on Thursday. And, of course, the Bureau of Labor Statistics will be releasing their employment numbers on Friday. So those will be more the key elements for this week in terms for economic data here. So as a result, the stock market's a bit down. Pretty much the investors kind of looking at how fast they've gone up. The valuations, are they overpriced? Are they right, or where they're at? They've been basing a lot of their purchases on emotion, based on after the Trump speech and all the promises, but yet they haven't seen any details. And right now they're at that point where they want to see details before they go any further one way or the other. One direction or the other direction. They want to kind of start seeing details right now. Also, we had some political climates here going on. Yesterday, there was a report North Korea launching a missile, landing in the Japanese territory sea. So, of course, that's going to raise a little bit of alarms right there as well. So little things like that could not pop up. Where things are at. Of course, next week we also got the Fed meeting on the 14th and 15th, where they're expected to raise rates about 0.25% next week. So that came up in the last week, going from almost no chance of them raising rates to pretty much a guarantee that they're going to raise rates at this meeting here. So let's go ahead and take a look here at what's going on with the bond market, and here we are. We were fortunate to rise above it and close above that. Auction helped us out, where the Fed was buying about 1.9 billion, I think it was, mortgage-backed securities. But today it's a different story. We started below, and we're right below. We're down about 7 basis points from where we were yesterday, and we hope to get above that. But the problem is this week we got some. The Treasury is going to be selling some quite a bit, about $56 billion worth of Treasuries. So with that additional supply, that could weaken us in our stance here and kind of push us down further if there's no demand. And right now we're not seeing it quite yet. So hopefully we can see some type of demand, people buying in and bringing it up further. But the problem is it could potentially push us further down, which would thus raise interest rates going forward. So that's something we have to watch out for this week. That could create a little volatility on the horizon. But if these geopolitical concerns rise, like North Korea launching missiles or anything else popping up, that might drive investors to go ahead and invest in the safe haven, which would be mortgage-backed securities and bonds, to go ahead and purchase those, and that could help us out. So be very careful, is what I'm saying here. Just go ahead and be a little cautious. These are a few things just kind of keep in mind going forward. But there is a good chance that we could see rates go up a little bit further before they improve this week with that additional supply. So just be very cautious here. All right, folks. So that kind of concludes it. Pricing today is probably slightly worse than where we were yesterday. So I wouldn't say a huge difference. It's pretty close, about the same, but maybe slightly worse in pricing here. But otherwise, this kind of concludes it today. And if you guys want more updates throughout the day, just come over to Twitter. You can find me up at Mike Bjork here. I do post on Twitter throughout the day if you want to get more updates. Have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow.